And what do you think about MU? Because I think it just broke through a pattern. Don't worry, I'll make sure to check it out. So, welcome you guys. It is a pleasure to have you guys here again. So, again, I will be monitoring the Zoom chat and I will be monitoring the questions tab on the Discord, making sure that, all the questions we're going to be able to get to them today. So, with that being said, let's go ahead and talk a little bit about SPY. I want to get into it a little bit, see what the possible moves are, and kind of what we're expecting in the next couple of days. It's still so puzzling to me how SPY slash ES, in this case, I'm going to use slash ES, can just recover the way it has. It's absolutely amazing, and the Fed has done their job. At least we can both say that. So the main levels that I keep seeing here is this, and if we go into lower time frames, we can see like there's a little cup and handle, and it failed to do so, and it seems like it's trying to break through again. So we have this level right here and this level up here to see a continuation. I mean, that's the way I would look at it. If I want to see a continuation to the actual top, which is this, and then the break of 3,400, which would lead us to brand new highs. So all this is extremely important for the next week, especially since it seems like next week is going to be pretty intense as well. I know that a lot of us we had a lot of things to go through last week. A lot of us had green days, a lot of us had red days, and it's just very important to keep in mind that you guys need to see this. You guys need to see where the market is headed and trade based on where the market is headed, because I don't know. I mean, the market is doing everything at this point to stay up. I'm very surprised that every single time it dips down like this, it bounces back up instantly. It dips down, bounces up, dips down, bounces up. This was the only interesting part that I saw specifically with SPY. This push down. Almost every single time it pushed down, it was one more candle that followed and then continuation on the upside. One more candle that followed, continuation of the upside. This one didn't even follow through, it just continued on the upside, continued. But this one specifically,
It also does it in the morning, like early
yeah,
in the morning, and then
yeah,
throughout the day it recovers. Sort of noticed.
yeah. I've seen a lot of things where, and this has happened with a lot of stocks. For example, in particular, Amazon. I think it was last Friday where we saw Amazon melt in the first 30 to 45 minutes of the market open and completely just revert back to where it once was and continued up. So identifying those areas in which um, stuff like that happens is very crucial. And how I've come about to kind of trying to identify these areas is mainly looking at the 15-minute chart and seeing, okay, we have our first red candle on the, just imagining here that we have that this is a 15-minute candle, right? Red candle on the downside. Let's say it's Amazon, right? So we have this candle on the move down. That's the first 15 minutes. And the next candle on the close should look something like this. Something I've noticed every single time that a stock starts to reverse after having, let's say, like this is a 50-point move from here on Amazon. Every single time this happened, it just dipped down to wherever it was its bottom, and it closed the 15-minute candle halfway or just anywhere above half, like from half to halfway, then what would happen is we would get one of these green candles right here. It would be not as big, but we would have this area right here. And the next 15 minutes would look something from down here. It would follow like very close here to all the way up here. And then we would just see continuation of the move up. And on the 1 to 5 minute chart, this looks something like this. It's just here, I'll do it colored so you guys can see. On the 1 minute chart, this would look like a push down, then a nice push up. Then what would happen is we would see consolidation for a couple minutes, and then boom, push up. So this is kind of what it looks like on the 15-minute chart. I'll see if I can find a specific example. I know that this happened a couple of times. But this would basically, like, if you see something push down and you see it push up, consolidate, and then it breaks that resistance area, go ahead and get into calls. It doesn't matter if it's up here even. You can definitely profit of something like that. And that's a very, very strong reversal pattern. All right, we're admitting one more person in.
Just to quickly add to what he just said about that pattern, if you look, he erased the drawing, but in that consolidation, what happens is if you look at a lot of other traders, especially the ones who are constantly profitable, drawing their trades, what you see is that in the consolidation pattern, they'll get in before the high or low or where major resistance is, where we're normally watching, and they'll get in anticipating that break instead of trying to get in later because they know that price action is showing that it's likely to break.
Right, so here, I want to see if I can undo what I just did. Yeah, here we go. Okay. So if, let's say, when you're in this pattern and you actually get before, you get in before the actual break, how would you be able to cut your losses or basically keep a level-headed mind while you're stuck around here? Is specifically looking at the tape. Looking at the tape, looking at the volume, and just seeing how your pattern on your selected stock reacts to the movements on slash ES or whatever.
Give me 1 minute.
So all of this is very important with this right here. You want to keep in mind that when you're looking at this type of pattern, you have this resistance. I want to draw it a different color, my bad. You have this resistance right here and this support line right here. If we were to see a continuation, let's say same pattern happens, but then we dip down on the downside. Now we're looking at an H pattern, which could insinuate if the market follows through with a dip as well, then we could see this level being broken and new lower lows being made for the day. That's a pretty strong pattern as well. If we fail to break out on the upside, then this pattern right here and this area where it broke will almost most definitely continue up to make a lower low. And I believe that this can be shown with an Amazon trade I took. I'll see if I can find it right now. But based on, I keep hearing notifications. So I want to see if you guys are on the questions. Yeah, if you use the on-demand feature, sure, thanks a lot. I don't have it recorded. I'll try to record it do it this week. Okay. Anyways, so be on the lookout for those types of patterns since they're showing up a lot. And again, keep in mind that if you're scalping, if your main thing is scalping, make sure that you are trying to get out at least before the 5-minute candle closes, near the it would be 10 a.m. Near 10 a.m., if you guys are trading like market open and you guys are getting into a scalp that will go through the first 30 minutes, you got to keep this number in mind always. And this is EST. Because what happens is most reversals will tend to happen in the first 30 to 45 minutes. So this time is extremely crucial to anybody who's scalping, because if you guys get stuck in something, even though it can continue its move down or move up depending on where you're going, you will not see the same profit even if it gets to the same area it was when you were most profitable. Like let's say here we're gonna see something like that, okay? Let's say this is stock ABC, right? So you got in right here, okay? You went through this move down and we popped up. This is 10 a.m. right here, the second we got here. So by the time you're here, again, let's say this is like 10:25. By the time you guys are here, you guys will not have the same profit as you guys had here. I'm sure that most of you know this, but just in case you guys didn't know, due to the Greeks moving obviously on the negative side, and depending where the VIX is at, obviously if the VIX is going up and stocks are coming down and you got puts, you will see a massive increase in premium. And if the stock is coming down with hard volume, you will see a huge increase in premium and you will see huge profits. Now, you will probably regain the same amount of profit once you passed this area and you're around here, only to just wait for this extra profit. So for you to risk the profit that was here just for this much almost doesn't really seem, it doesn't really seem worth it, because you could actually experience the same pattern that we talked about right here, where we have consolidation and then continuation. Now, this pattern specifically has been very apparent nowadays, because every single time the market dips down, they keep buying it back up. And there's really no top to this. I mean, the Fed keeps buying, and they're going to keep doing it. You can see one large red candle, they'll buy it back up. And I'm very much assuming that by Monday, we will continue seeing the market to push up, and we will push above this 3380 level to at least 3390 within the next week. So we may see higher highs next week or a week after the next week, unless some sort of fundamental, I don't know, attack or whatever starts to happen. But the way things are going is that we cannot fight the Fed. And yes, this is very rigged. We can't fight it. We can't do anything about it. There's a lot of bad things going on. And we just got to accept it. They're in control. So we got to go with the flow. And all right. So again, keeping in mind that these levels are very important. So if you guys want to go ahead and write these levels down, if we go below this area, expect to move down anywhere towards this area right here, which would be 3330. And if we continue to move down, like let's say the market is actually, I don't know, something happens within the next couple of days where we decide to move down, okay, we will see a retracement and then continuation of the move down on this level right here. If we actually begin to cross this level right here, this 3320 level, I know this is not a straight line, my bad, you guys. If we cross this level right here, we could definitely start seeing a little bit of a reversal tendency, but still nothing I would nothing I would actually like say, okay, yeah, we're in a bear market now. The one thing that's interesting to me though is that the last time, obviously, again, we're in pandemic times, but this is kind of something you guys have to keep in mind. If you guys don't follow the VIX too much, I suggest that you, or at least most people should. But here, let's go ahead and take a look at the VIX. When we were at all-time highs in the market, the VIX was trading around 12. Like you guys can see right here, this 15, 12 area. That's considered very low VIX. Anything above 22 all the way to whatever number is up here is considered pretty high VIX. So it's pretty interesting to me that VIX in its own is trading above 22 when we are literally almost 20 points away from being at all-time highs. So just that's kind of, I mean, that's the only red flag I kind of see as of right now. Knowing that the Fed will definitely buy any dip, and their job is to do that at the end of the day. But it's just keeping that in mind that we're not out of the water yet. So anything could definitely happen at this point. These are, I would say, pretty important levels right here. Because if we cross this area, we're definitely going to see a push towards 3390 or 3400. We could be seeing higher highs, but always keep in mind that with these things, anything can happen. So these are the possible levels to start going bearish. These are the possible levels to start going bullish. And basically asphyxiate your trades towards where these levels are being broken within the next week. Now, I will go ahead and take some questions, and I will also pass it on to Jay and Umer and Noah, because if they want to let you guys know on anything else that I didn't inform you guys, I would like you guys to know. Now, I'm just going to go ahead and take a look at the questions tab. So somebody said, can you take a look at Baba and also MU? So let's go ahead and take a look at that. I haven't taken a look at Baba in a while, so let's see. All right. Baba, let's see you. So we're currently trading around kind of like this area right here. And this area right here. Seems like they're about to have earnings, so probably next week is definitely going to be some pretty high volatility coming on. Or actually, it could lower the volatility because nobody's really sure. I would just watch the level up here, right above this area. And right below this area. These two levels are extremely important. As we start to see these levels on the upside, we could definitely see something like this. So we do have, I mean, what I don't like about the upside is that we have this area right here specifically. And we cannot seem, well, that's going to be dependent on Monday actually. But from what I'm seeing is that this could actually insinuate something like this. So we had this push down, nice little retracement, and then continuation of the move down. So we could actually see a push towards this area right here on Monday. And if it decides to go on the upside, what could happen is that we see a push down first in the first 30 minutes, recovery, consolidation, and then continuation towards right up here, only to break this area right here, this 258 area, in the next like Tuesday or Wednesday. So that's something, I mean, these are two levels I just watch out for. And if you're trading within these two levels, I can imagine that you're just going to get stuck in a lot of fake outs. because you want to trade breakouts specifically when you're scalping. And unless you're day trading this, if you're day trading this, you still want to wait for a breakout so there's some direction and you can actually profit from it. So yeah, I guess this is going to be my 2 cents. And depending on where the market goes, this could also influence it. So it seems like the red candle on Friday really influenced this BABA trade. So let's go ahead and take a look at MU as well. No problem. This is also being recorded. You're good. Let me know if you have any questions. Also, this is all being recorded, so even though you're late, you don't even need to worry about it, okay? So, MU, this is not something I usually trade, but let's go ahead and take a look at it. Ooh, that's quite the downtrend. I'm trying to look for a support anywhere near here. Seems like 45 would be somewhat of importance. I could actually see the stock pushing a little bit lower, anywhere below.
Emiliano, check the waiting room. I think there's quite saying that he's waiting in the room and like he needs to be let into the meeting.
I have the waiting room, but here, I disabled the waiting room. And that should let anybody inside, but I don't see anybody coming in, Jay.
Never mind.
Yeah, okay. Anyways, as we look into MU, I'd probably hold these 2 levels accountable. You have this one, let me see. I guess these are levels I drew in a long time ago. All right. So we've got this level right here as kind of a resistance, since this was the top of this day. So we could see this being visited again on Monday and then having a bit of a retracement towards 43.23 if the market pushes up, and then continuation of the move down. Since the move is pretty bearish, I would imagine that most moves up are going to turn into a retracement. And for this to actually be called a reversal, I would need to see it above this 48.75 area. So we could actually call it and say, okay, it has some potential to move on the upside. Let's take a look at this on the 4-hour chart actually. Okay, yeah. So you could see that this level, we visited it, and we could definitely see, I mean, there's definitely some buyer intention again here. You can actually see that the same pattern that I told you guys, the drop, consolidation, and then move up. This is basically what it looks like on a 4-hour candle. Let's take a look at it on the 1-minute candle. This was literally just a recovery. Drop, 1-minute consolidation, I guess, and continuation of the move up. And it did nothing. It just moved between these 2 areas and then broke up. So MU, depends on where you're looking at this. If you're buying this to buy the dip, you definitely need to see this area being crossed, and then your next worry would be up here, this area up here, and then continuation towards this area. You see this area right here. It's definitely somewhere you want to keep in mind, actually, right about here. So for this to be called a complete reversal, and then for this to be actually bullish, I'd like to see it come through here before continuing its move down. And for this to turn into a reversal would need to basically jump through here retrace towards this level right here, and then continue its move up. So let me go ahead and erase that right there. Oh, there we go. So if you want to see something like that, and I mean, on the healthy side is continuation of the move up, retracement, move up. I have and a decent example that I will show. Okay. So with MU, I think it's pretty, I mean, as of right now, I'm looking at it more on the downside. If you're actually asking for my current thoughts on it, but I
That
want to,
whole sector, the MUs, INTC, AMD, even AMD, it's been really strong, but it's been pulling back. But INTC's been going straight down, MU too. So after INTC's earnings, most people are looking short on MU. So
yeah, and as soon as we start to see this short area and we break this 45 level, we could definitely see MU going towards this 44 level and going, nah, it should bounce around 44. It should bounce around 44 if it decides to just completely melt. But we should see a bounce around 44, a retracement around to 46, and then continuation down if everything decides to just go down. But again, so we took a look at the reversal type situation where we would need to see it above this area right here. And we also took a look at the continuation. So if you want to see some continuations, expect a break of 45 towards the area of 44, and then a reversal to be a break of 46.61, and then a continuation above 47.35. And can you explain how to read the tape beyond just speed? Oh yeah.
I actually have an example that I just found. If you want me to play that, and then I'll explain, and then you add to whatever.
Sure. Actually, I want to have Jay go ahead. I'll go ahead and answer these questions in a little bit, but I want to have Jay go ahead and share because he has a lot of things to share with you guys, especially for some people who are looking to swing. So if anybody's actually looking forward to swinging stuff and learning a little bit more, Jay is definitely your guy. So let me go ahead and enable you to share your screen. Okay. All right. I'm just gonna, Jay,
Yeah,
I'm gonna go ahead and make you host.
yeah. I'll just transfer
And
back like last time once we're done.
okay, I'm gonna make you host right now.
Okay.
There you go.
Okay, thank you. Here we go. Okay, so I think you can see my screen, right?
Yes, we can all see
Somebody,
your
okay.
screen.
So I'm gonna start with a quick tape example, and as I do this, I'm just gonna put up. Can you see the? Oh, okay. Never mind. You can't see that. Never mind. Okay. So I'll just say what I'm looking for as I'm watching this one. This is actually a good example. It's a little bit not as good as it should be even on Thinkorswim if you're watching it live, but it's the best I have for now. I'll try to record something maybe for next week. But yeah, I'm gonna play this and I'll tell you guys what I'm looking for. So before I play it, I'm looking for. Oh, can you guys see everything, or is there something blocking? Give me a second.
So there's something blocking the right side of your screen and the upper side of your screen as well.
Oh, that's weird. Okay, let me close everything else. I see. Okay. Uh, Now can you see? Is it fixed or no?
No, you have the same little box right there.
Okay, now this is the only thing I have open.
Selamünaleyküm yeğen.
Okay, now there should be nothing.
No, we still have that.
Oh my god, this is so annoying. Okay. Is it clear yet? No. Maybe.
Okay, why don't you just go ahead and explain it, and we'll try and see if it goes away.
Wait, can I transfer host back to you play this exact clip on demand?
Okay, sure.
Oh, okay, I transferred it back to you. I'll give you the date of the clip. It's April 30th, 10:15, 30 seconds on Tesla.
Okay, you mentioned April.
April 30th, 10:15, and 30 seconds.
I'm gonna go ahead because it's gonna take a little bit of time. Now this is just pre-buffering.
Okay, so as that loads in, let me just explain what I'm looking for, and you guys should see it in the example. So the first thing is, for me, I know that tape speed seems simple, but it's overall the most important thing because it indicates that there's more. It's what shows in volume is higher tape speed is more transactions going on. But in volume, you'll only see it once the bar closes. You won't have a good idea unless there's a spike. But when you see the tape accelerating, what you know is that people are watching the level. It doesn't confirm whether the level is going to break or not, but it confirms that people are watching the level and it's actively traded, which is the first thing you want to see, which means that there's a good chance that it may break or it may bounce. Explicitly, it does not tell you the level is going to break. It only tells you that the level is there and it's an important level. So the next thing that I'm looking for is, this is mainly on bigger price stocks, but the spread is really important because like Tesla and Amazon, especially even Apple sometimes, Nvidia, Netflix I've seen it a lot. The spread is really important to understand, like how when you see that the spread's closing, it means that one side is stepping down. So for example, when I'm looking to short, I will see like I'll look for more the ask stepping down, and normally the bid will hold the level. And if both are stepping down together and it's tightening, that's also a good sign. So let me make sure that's the right clip. It is
So again,
April
we're
30th.
we're
April
approaching
30th.
this April 30th, 10:15 almost. My current time in sales is not loading up, but again, you guys can see the level 2 right here.
Okay.
So again, when looking at level 2, if you guys want something to be on the downside, you guys want to see the bid being hit, and you want to see it right at the top. Of course, you want to see it with some speed. That's something pretty important. But again, keep in mind that you got to see the price. Don't worry too much about the time, but the price and the size. Time will always come while it's always the first second will always be up here.
And
So
if you're not using Thinkorswim, what happens is you can see prints above or below, above the ask and below the bid in a different color on Thinkorswim. The only way to see that is actually by having the bid and ask up next to price. But that really shows you sentiment. For example, if I'm at a key level and I'm seeing on the short side, I'm seeing that there's tons of orders coming in at or below the bid. The tape's printing red, it's speeding up. And in this example, there's actually, you'll see on Tesla, the size on the tape is almost always 1 and 0. But in this, you'll see at 852, like the price 852, a size of 5 will pop up for about a second and then disappear. Emiliano, while yours loads, if you want to transfer back to me, let me try. I closed everything, closed the chat box. It might work.
yeah, close the chat box. That
Yeah, I
should
closed
make it
everything.
work. Okay.
This actually, I wasn't even looking for an example. I opened Thinkorswim to the last on-demand date I had, and this trade popped up. So
Here, your hosts, go ahead and take a look at it if it works for you. And yes, Zoom sometimes does interfere with
is it
Thinkorswim.
working?
So wait, yeah, now it's working. We can see your screen now.
Oh,
You're cool.
perfect. Okay. So still can see it?
Yep, we can see everything around it.
So I'm going to play this. So here what I'm looking at is this level is set on the hourly. And I will move levels a little bit by $1 or $2, adjusting an intraday based on what I'm seeing. But here I also see a clear uptrend line, which is visible on the 5-minute as well. And the price is below the VWAP and has been consolidating tighter below the VWAP and volume is dying, which is all good signs of showing strong consolidation. So now let's hope this loads. Okay, so my tape is showing up. Okay. So if you see right now, the tape isn't even moving fast, even if you think it's the lag, it normally moves faster than this. But what you see is the price, there's not much action. The tape is moving relatively slow, and the size is 0, 1, and 2. So I'll try to pause it when the 5 show up. You see a couple of 2s at 852. And then a 5 shows up, but let me see if I can pause it right when that happens. Okay. So you see there's a little larger size. Tesla, even 2, I consider a little bigger than usual. It's almost always 1 and 0s. But on SPY, you'll see 10, 15, 20 like normally. Okay, right there. You see 852 size of 6. You guys can see that, right?
Yes, we can see it.
Okay, perfect. So this is where I'm seeing that the level is tested and someone's trying to buy up at 852. So I don't get short yet. Getting short here can be a big, big mistake because if you watch the tape carefully, there's multiple times where it will show a size like this and you'll get a pop all the way back up to the VWAP just in a second or two. And that will destroy your Premium, destroy the Premium. So now I'm waiting to see what's about to happen next. So it goes to 5. It gets a little smaller. It's pushing down, and on this side I'm watching SPY. SPY is also pushing. If I want to be risky, I can get in right now. And now you can see the tape slowly starts to accelerate, and you'll see it much more now. And as I see the tape accelerate, I can just get in, put an order, and then it fills me. I just bought the ask, and you'll see that the Premium spikes as this happens. If you're trying to place your order here, you'll automatically be down $100 by the time you get it. So that's the biggest mistake that's made. It's a mistake that I've made hundreds of times, getting in as this spikes. If you're going to get in like this, what you should always do is not even wait for a hold, wait for it to go down, pull back a candle to turn green and pull, and you get in anticipating the lows re-break. So if you didn't get in yet, what you would be doing is you're watching now as you see this rejection, you could try to get in one more time, but it's still risky. And now I'm waiting for that push down, and I'll be out by 10%. So right now this is at 9%, I'll be out by 10% if I'm scalping. But if you watch the rest of this, and this is a good example to watch how the tape moves once a clear trend is happening. You'll see that the tape keeps its speed. The tape rarely slows down if it's a strong move. And you'll see that there's size popping up on the bid. Like if I go back 10 seconds, the 5 popped up on the bid and disappears. So that's showing you that the sentiment's continued. But if I see the tape slowing down, I'll take 5%, 4%, even break even, just get out. Because the riskiest thing is these moves pop. So now the next caution point is watching low of day. This is what Emiliano showed you guys in that consolidation drawing. Here I anticipated a triangle breaking, and I can get out at, right now I can probably just get out at low of day. So I just place a sell order to get out at low of day. If not, what you do is you anticipate the break of this and you hold. So for me, this is more than enough profit to be out. I don't mind being out at 16%, 15%. That's more than enough for me. Because this is what you want to avoid. If you're a scalper, you don't want to be stuck in this pop. Because this pop might not come down. I know it comes down because I watched this. But in a real pop, you don't know if this is going to bounce or come back or not. And always, your first caution point should be the lowest close, and the next should be the lowest low. A lot of people ignore this and just use this as their point. But you should be cautious, especially around this point also. So if you want to continue watching this clip, this is the date up here. You guys can put it on, and you can watch. There's tons of examples where you can watch the tape speed up. Like if you want, once you post the video, just watch the beginning, the speed of the tape. It's barely moving to now, and it's moving way more now. So that's the type of thing that I look for, especially in scalps. Even day trades, you should be looking for the same thing. And if you want to re-enter, you still didn't get in. Now what you're doing is you're watching a low of day break. You anticipate as it pushes back down. You look for size of 18. It disappeared. I couldn't catch it. Let me go back 2 seconds or 3 seconds. Wait, this is the.
You're adding minutes, yeah.
10:19. Back to 10:18, and that's actually. And on Tesla, I'm telling you guys, if you watch the tape enough, you'll know what's regular size versus what's not. Above 2 is definitely not regular size. Oh, it's right here. 847, you're seeing a size of 18. I would guaranteed be out by now. I'd be out and I'd be looking for a re-entry. This looks like a strong move. Volume has picked up. Especially if you're a scalper in these markets, don't be done after the first trade unless you have a set target for the day and you met it. Watch and look for the re-entry because these continuation moves, I scalped Amazon 4 times down on Friday. Because it's going down, each time I anticipate the low break, get in as it turns back to the downside, get out near the low or right below the low. So what I would have done is I would have been out. I'd be looking for a re-entry below this price. If you see this and you're scalping, you should definitely not be holding. You should be waiting for a re-entry sign. So let's watch. So you see 18 at 847. And now you're watching for it to print below 847. 848 still the price it's printing at. 848 you're still printing at. It's still printing 848. You have size 19 down here. And you'll always get these pops. So if you guys know who Legacor is, he literally just trades the opposite of this. He looks to buy it when this size comes on. He's not expecting a reversal. He's just expecting this pop. That's why he places his limit orders below the price and waits just to get filled. So now you could add as you see this. So 847 is disappearing, 847.10, 845. So you can get in just as you see 845 print, you can get in. There might be a spike, but it normally will hold and continue down because that large order is gone. So I hope that helped you guys. You should be looking at, sometimes it helps people to even talk while watching the tape because it gives them a good idea of what they're looking for. So I think this is a good example. Tesla's tape is not one of the easiest to read. If you want, one of the hardest to read is SPY, but easier tapes to read are stocks that aren't traded as much. For example, when FedEx was running, the tape is clear. Like you see where the size is, you see where people are sitting, that type of thing.
I don't think
So if
anybody
you,
can actually read SPY.
SPY is insanely hard to read. Like it's just 20, 30, 40 all over the tape. But yeah, so that's my example for this. Always watch these lows, and I prefer anticipating the break of the pattern and anticipating the break of lower day, high day. So if Emiliano or Umar, if anybody else has anything to share, go ahead. If not, I'll go on the swing stuff.
For the moment, I have not much to share. I do want to answer some questions, but I'll go ahead and make that until the end of the stream and go ahead and share your swings.
Okay, is my screen, did that white thing happen?
Yeah, you took it out. You're good.
Okay,
Go
good.
ahead and read Josh McKee's message. I think that's for you.
Yeah, let me read that. Okay. When placing a limit order, is it possible to not get filled after the stock pushes through your level? For example, say Tesla is trying to break 1,000, you place your stop limit order 1,005 for a break to get in. Okay. Tesla breaks 1,000, has a big reaction. So what this is known as is price can skip. It's not continuous. So what happens is when someone places a large order or there's someone holding the level, what happens is if that order disappears, it can skip. Like if you watch the tape carefully, at that 18 order at 847, that order disappeared and the next price on the bid was 845. So if you had a order to get filled at 846 short, it won't get filled till the price pulls back up. So I think that answers your question, right? It is very much possible not to get filled. Yeah, the box is the chat.
Specifically when using limit orders and when you're trading options, if you're using a limit order on, for example, Friday, it's going to be extremely difficult for you to get filled.
I never use market, but I use buy the ask sell the bid, which is the equivalent to market, except you won't get filled at an extravagant price by market makers. It's the identical thing.
Yeah, so it's just you got to start seeing your way around things.
Yeah, and to answer this next question, bids are the buyer sitting at a level and asks are sellers sitting at a level. And they get filled by market orders or people like me who buy at the ask, sell at the bid. So yeah, but everything on the tape is a transaction. It's just, there's no buyer or seller. It's a transaction between two people. If it's green, it happened near the ask price. If it's red, it happened near the bid price. I don't know how Thinkorswim's coloring works really, but I know that generically you can, if I open DOS right now, I know I'll do it at the end if we have time, but if I open DOS right now, there's multiple options to show your coloring, and that's
Well,
how you really should be thinking about it.
the way the coloring works on time and sales is anything that's green, like look at that where your cursor is right now, that 845.36, two below where you are.
Mm-hmm.
Okay. The reason why the next one is green is because it is above 845.36.
Sorry, give me a second. I'm trying to show something that I normally do in my tapes. Okay. Yeah.
Okay. So the reason why the next color is green is because that, or like there was shares bought above the previous area of 845.36. So the reason why that one's green is because it's 9 cents. I mean, not 9 cents, sorry. Almost 19 cents above. And the reason why the one above, can you move your cursor towards time and sales? Up to the next red. So you see, the reason why that one's red is because the last one was 845.5853, and that one is 845.565. And the next one is green because it's 845.7899. And the reason why the next one is red is because it's less than the previous one. If it's green, it means it's more than the previous one. And it only follows suit to that.
Yeah, so I don't like the way that Thinkorswim's timer sales work. If we have time at the end, I will pull up. I don't have the option to replay on DOS, but I will pull up to show you guys how the coloring should work. And if you have any other, I think any other broker than Thinkorswim, that you can set your coloring. But for now, I'm going to quickly just go over some swing stuff.
Yeah, and just to answer Visay's questions right there, you can do what you're doing. Don't even worry about.
Yeah,
I'm
okay.
just gonna answer his question.
Yeah.
The way level 2 colors work is the same idea as I just explained with the time and sales. If an order is below the current bid, it will turn out red. If an order is below the current ask, it will turn out red. And it's basically like that. Yeah, basically red represents a lower price and green means higher price than the last price. Yeah, the most recent price. Like you got to look at it from the most recent price that was recently presented.
Okay, so I'll go over a swing trade that actually.
And
My
yes, Jose, yes, there will be a recording of this.
So I'm going to quickly go over a swing trade that actually my twin found, and I was surprised because I'm showing him how to trade, and then I looked at it, it was like actually a good trade overall. So this one was, I took this one, got 50% off of it. I don't know, let me get this clear. Okay, yeah, so this way. So it was this day I got in long here. If you look at this, first thought is this is really extended on swings to get in. But what people don't understand about swings normally is the way at least I swing, and if you watch a lot of other guys swing, is they're looking for strong moves and continuations. They expect a pullback, but they're also looking for a strong opening into the next day. So that's why if you look, when I scan for swings, I look for a few criteria, but the most important one is I want it closing near high of day, closing within 0.3, 0.4% of high of day. Because that's what makes that momentum continue. It's like almost as if you're momentum trading, but you're looking for a strong close. Without the strong close, the only way to swing trade is you have to focus on catching 4-hour pattern breaks as it actually happens. So for example, if you want to get long NVIDIA on a 1 hour or 4-hour break, you could get long here. Then it's a different story whether a close is strong or open. But the way that I swing to it is more based on towards the end of the day getting in and trying to get out the next day into the open or the next day into the close. I rarely hold more than one day unless I plan it like that. For example, pre-AMD earnings, I plan to trade to get in and hold for a while. But 90% of my swings are like this. So I look for a few things. So first, actually my scanner might make this easier. Okay. Okay. So first I'm looking for the squeeze to have recently crossed over zero. This is just that it's bullish and that it hasn't been continuously running upwards. I don't want to take a trade on a stock that's up for its 10th day in a row. I want to take a trade into a stock that's newly crossing over and moving into a breakout. Next, basically I want to take a trade where it's first or second day green bar on the daily chart. So the next thing I'm looking for is it has to currently obviously be greater than zero. This is, it has to be within a small percent of the high. So 0.3% is what I use, which isn't like 0.3% of the daily board, it's 0.3% of the stock's full price. So on Amazon, it's 0.3% of 3,000 something. So that's what this is looking for, which is and I adjust this criteria. For example, if you had a really bullish day on SPY, I'll make this 0.1% or 0.0 or 0.2%. But if you had a day that's not as strong on SPY, I'll look 0.5% and see, because I have to adjust it based on the market to find better swings. And the last criteria is I'm looking for the TTM squeeze's absolute value to be in between its averages. Because, let me go to a chart here. Because, for example, I don't want to be taking a swing on a second day like this. I'd rather be getting in when it's releasing. So I know historically, as it breaks, like it's at this point, it's going to start moving strong. So I'm looking for this crossover continuation and get long into the close. A lot of people have asked, I've got this question frequently, why don't you just get long on the 4-hour and 1-hour pattern breaks? It's because as day traders, we're not watching every stock we can look for swing. If you look at my swing watch list, it's at least 100 stocks, 120 stocks. I'm watching for swings, news, catalysts, all that stuff. So it's easier when you have a system that you can rinse and repeat. For example, it's easy for me to rinse and repeat, knowing end of the day, last 30 minutes, I'll scan, look for stocks that are near the highs, then go to their charts on 1-hour, 4-hour, and daily, look for a pattern and get long. So swing trading is like highly overcomplicated. It's not as complicated as it seems, and people lose on swing trades mainly because of two things. They're taking a stock that's up 5 days in a row, 6 days in a row, or they're taking a stock that has not closed as strong as it should. Or they're taking a stock that has earnings, or there's news. Some weeks you just shouldn't swing. Weeks where there's really important economic data coming out. Weeks where the market's mostly range bound because of an anticipation, you shouldn't be taking swings because you know that momentum is not likely to continue a second day. So here I saw this huge run on NVIDIA. I day traded this as well. And then I see this coming into the close. It's closing near its high. What I really liked is this candle. This is one of my favorite setups. What I'm seeing here is that this is extended. I probably would not have taken this without seeing this tail. But this is showing me there's renewed buying pressure. That it's not just a runner that's now lost its momentum. There's renewed buying pressure. And volume is increasing into the close. You see strong buying volume at this point. If you zoom in on the 5-minute, I guarantee you there's strong buying pressure exactly at this area. So I got long around here and I exited for 60% up here the next day. The reason why I get out at 50, 60% is it's great to hold multi-day runners, but if you're trying to build an account, you build it step by step, not looking for home runs. So if you have the capital, you go into 10 contracts and you scale out and you hold 2 for a bigger move. But if not, if you're trading one contract like I do on swings, $200, $300, you just get out with 50, 100%. And your win rate will be much better than holding for 150, 200, 300%. So another example on this one that I swung. So I watch this another example. These stocks naturally look extended into the end of the day, so I know that they're not going to run crazy the next day. But I know that there's a high chance that pre-market they gap up and they have opening rallies, and then people take profit near the highs, and I take profit and get out. If you want to get into trades where it's supposed to run the next day, look for patterns where it's breaking out near the end of the day. So for example, if you got in here anticipating this break, this is a great trade. But hindsight's obviously 2020. But when you're looking at this chart, if you're looking at it just like this, if you're looking at it just like just here, it looks like a decent pattern break. You're getting some increased volume. You could take it, but a lot of people are hesitant. There's no clear moment. But the best trades that run like crazy into the next day are trades like this, where it's just breaking to the end of the day. The moving averages are curving. So on that note, does anybody have questions about the price action and the into the close stuff before I talk about the indicators that I use?
Yeah, that was my next comment. I wanted you to see if you could kind of explain your indicators, but then you're going into that.
Yeah, for sure. For sure. So the first thing is about indicators. If anybody has any questions, just let me know. If there's swings they took and they want me to break down, let me know. And I'll explain the Tesla swing I took, which was more of not exactly price action, more of just you have a feeling that something is going to happen. It's historically happened and you take the trade. But so first, this is something that I started putting recently. It just shows me the info on volume, the percentage, the daily versus the regular, that type of thing. So I'm looking obviously into the end of the day, increased daily volume, but I don't scan for this because there's no threshold I can use. Sometimes the volume will be dead the whole day and it'll be breaking out into the close like this day. So I don't want to scan and eliminate good plays. I look at the ATR as well and the RSI. I don't want stocks with RSIs of 95 into the end of the day. The highest I'll take is 70 because like I told you guys, I'm looking for a strong push, but I don't want it to be so extended it's likely to reverse. Then the next indicator. So volume is by far my most important. I want to see volume increase and I want to see buying pressure coming in, like I showed you the tail on that last candle, or bullish closes like this. These are the two things that I really like seeing into the close, 330, 345-ish. The next thing is stochastic slows crossover, which should have happened a decent amount before you get in. The stochastic slows, what they're basically showing is a shift in momentum. So when I see this cross, I also see this cross in EMAs. What it's showing me is it's confirming price action. It's confirming that there's a clear trend to the upside. It's confirming that there's a clear move coming in. And this shows me that it can ride up. So the best thing about moving averages is that you can allow them to ride. I use 5 mainly, not for entry, but for exits. The 5 moving average I use as like a tight stop, a significant close below. Like I'd be out here if I had entered all the way back here. If I entered near high day, I'd get out on the spike because I know that it's likely to reverse. And I use the 21 and let me, I draw what period this one is. The 21 and 9 for crossover. So I'm looking for the 9, which is the blue one, sorry, the purple one to cross over the 21. So this shows me that there's a trend shift. Because often you'll get price action breakouts like this, but there's no trend shift. You're still in a downtrend. There's no sentiment changing, and those are riskier plays. Here, I'm getting a symmetrical breakout. For example, if you got a triangle breakout down here, you get a perfect triangle, and it breaks here. That's not showing me a strong sentiment. I'm not sure if it's going to continue into the end of the day. For example, this could have made a decent trade, but it gaps down into the next day because there's no strong close, number one. And number two, you're still in a clear downtrend. The moving averages aren't clearly curved, all going upwards. The moving averages aren't holding clearly, that type of thing. So this just helps me eliminate plays. Remember
So
indicators, yeah.
if I may add to something right there, just in case, like let's say that nobody actually had those EMAs nor the charting or anything like that. The second you guys should have seen that this was a trend reversal, if you take a look at that 136 level right there, exactly. If you take a look at that 136 level, the moment that that 136 level was broken, we had a push up towards 138 with great volume. And you can see his TTN squeeze almost topping out around like the middle of the day, meaning that you had both very nice scalping and day trading opportunities. If you wanted to swing something like that, of course, you could have used the stochastic flow. The stochastic slow chart or indicator to continue on holding into something like that. But again, if you are just trading based off on chart, like no EMAs, no nothing, the moment you saw the cross above 136 and you saw some volume coming in, should have been the first sign of this for it to actually continue its move up.
And if you ever see a pattern like this, especially if you're scalping, you should be anticipating to get out near here. You should never be getting in below this unless the tape is telling you to. If you're swing trading, I would never get in if I see this unless it broke this. If it broke above it, it's a different story. This is literally, if I was a short seller, this would be the golden point for me to say I'm getting in, and I wouldn't be out of this trade till it breaks the high. So something else I've learned over time is try to think in the other side, think from the other perspective. If you're long bias, think short. Who would be getting short here? Who's getting squeezed out short here? This run is mainly because all the shorts down here, who tried to short are now getting squeezed out. You get that huge move up. So I'm telling you, if it breaks up here, you're going to see that same move, a squeeze above the high. So that's the type of thing that you see here. So, and then the squeeze is my most important indicator because of the fact it just shows you where exactly how long price has been consolidating. And it shows you it doesn't need to be a horizontal consolidation. It's just how long price has not really moved or it's just been chopping. So this area looks like it's breaking to the downside, but squeeze is dead at zero. Because of the fact there's no strong sentiment going to the downside, there's nothing really pushing it down. It's more of you made a strong move up, you're more of consolidating. This is almost like showing you balance where it should be. And as it releases, you're trying to catch those situations of imbalance, and as it comes back down, you're coming into balance. So this is an extended move. Some people would want to short here, but I wouldn't short here yet because I'm not sure if this is just the stock taking a pullback and resting or actual reversal. So this looks like a good reversal sign, but is this stock going to push down after a major pullback? We don't know if it's going to
So
do this.
Namo had a little question. Was that a rejection at 136? Yes, and for some, I wanted to add something to the current chart that you're looking at. So you can see that 136 was used before earnings as a support. It broke that support. Take a look at that 136 level and you can write, So you can see that it bounced 1, 2, 3, even a couple more times in the past. It used it a little bit. So we can see that as soon as we broke that 136 level that we saw, in the next 4 days, we came back and revisited that level before continuing the consolidation slash trend downwards towards 132. If we were to see a continuation of this downward pattern, we would then need to look at the lower low, which would be 130. If we were to cross 130, then we could see a move down to 128, then possibly 126, and we can plan our trades accordingly to that. But the moment we went to 136, we knew that we had a resistance at 136, as previously shown that that was also support. And again, when we break a support, that becomes our new resistance, clearly shown in the chart. And also this is called a retracement. This is also a healthy move for a possible gap down. Therefore, we didn't see, as shown in the TTM squeeze, we didn't see any sellers coming in. So the moment we crossed 136, it was pretty well and said that we could see a high probability trade on the upside. And then the next day happened where we went up almost 6 or 8 points. And then we continued on to the next day where we topped at 146 and then came down to the previous resistance of 145 around that area.
And if you think about this a little more, what you see here is stock makes a strong move down, you get a consolidation, and people are adding short sellers, the same way we anticipate a breakout to the long side, they're doing the same thing. They're anticipating these shorts, you get shorts all stuck in here, and you get that squeeze up. Next chance they see this candle form, they're getting in short again, anticipating another continuation to the downside. Squeeze yet again. So now you're up near here, and there's no clear sentiment of which way people want it to go. But up here, you see a really, really clear squeeze because a lot of short sellers will be trying to capture this second move from down here, expecting it to make a strong move continuing down. Because this is a major, major earnings downside move that could have seen continuation, but it didn't. It's all reversal. So with earnings, you can never be sure which way the stock will go afterwards, but price action normally will tell you, and volume is huge during earnings, which means squeezes will be amplified. So on that note, I'm going to do one more. I'm just going to talk about Tesla. If anybody wants the stock they want me to break down looking into next week for swings and stuff, I can do that quickly. So let's see. Okay. So in Tesla, I took the swing into this day's close. So basically what happened is, again, you'll see the same thing in a lot of my swing trades. First thing you notice, this tail into the close. It didn't close too next to its high. I don't like this rejection candle at all. But because of knowing how Tesla moves on the daily chart, this is why I called it a YOLO play instead of a regular swing, because of that candle at the top. But if you look at the daily chart, Tesla historically, after a strong day with volume, will gap up consecutively. Strong day gaps up and then comes down. I don't know if it's going to continue, but it always gaps up. And here, this is something I don't know if all of you know, but when you have a stock that's made a consecutive move down and you get a strong gap up, it's what they call shock value. It means that everyone who's short from here down is now trying to cover, desperately trying to cover, which gives you that first squeeze up, which is why these gaps are the most important. So this increased my sentiment a lot towards getting long and looking for continuation, because you'll see a short squeeze, a consecutive multi-day short squeeze. But some people will have their stops here, others will have their stops up here. But these are the next key levels for daily traders. So once you see that, let's go back to the hourly. Then if you look from a technical side, let me go to the 4 hour actually. From the technical side, what you see here is you have one trend line coming down from the highs, which was being tested into the close this day. And then you have a more minor consolidation range which actually broke to the short side, which was a fake out if you think about it on the larger time frame, and now reversed to the long side. So this is what's known. This shows that smart money is messing with this play because of the fact they bring the price down below where retail traders are holding as support, and they accumulate down here, which is the lowest price they think they can get. And as they accumulate here, you look for a bigger move to the upside. So what I see here is I'm getting in at the end of the day. This is swings I put in two bags. I put them into the bag of anticipating a breakout versus playing the breakout that's already happened. This one was anticipating this major trend lines breakout into the next day. So I got in as it closed, seeing that 1 hour candle, which showed buying pressure. If not for the 1 hour candle, I probably would not have taken this. There's no sentiment of buying pressure. If you get this and you get a continuation to the downside. So you get in, I actually got in right here near the high of this candle over here. And I was down 20% as it closed because of IV into the day. I was going to cut it, but I held because it was 20%. I knew if it was going to come down, it was going to be 30%-ish. So I get in, and then I see this into the end of the day it held, which is a good sign. It held above its moving averages. And then you see a rally pre-market. And my exit, I'm not going to talk about exit strategies today for swings, but I got out on this spike on the open. I actually tried to get out on the spike. I was up 180% up at the spike, but I didn't get filled. So then I was waiting for it to come back up, but it broke support the low of day, and I just got out for 80% then because I wasn't going to hold and see what was going to happen because it was a same week expiry contract, and it was going into Thursday, so I didn't want to risk it, so I got out for 80%. So these patterns normally, the most important thing I like to see is either a bullish close or a candle showing buying pressure into the close. And right now I'm working on a scanner to look for this. If you look at the indicators, first of all, volume is just huge compared to other days. Volume's just been minuscule on Tesla for days, and if you look at the daily chart, you get a way clearer picture of the volume. You have minuscule volume for days, and you actually see volume even squeezing downwards. You see volume squeezing straight down, and now you get a huge green candle day, double the volume of at least the last 5 days. And you see the volume coming in, which shows more money is pushing in, people are covering, all that stuff. And I get in, anticipating, and it pushes up. Stochastics on the daily. Oh, one thing about swings, I'll talk about multi-time frame more next time, but I check multiple time frames from the weekly down to the 1 hour. It's one of the most important things to do, but I'll explain how I do that next time. But you see a stochastic cross here. The squeeze wasn't really aligned. This is why I call this an anticipation play. The squeeze was not showing me a move to the upside yet. Yeah, they were showing me a reversal from the downside. So I'm buying the shock value up, expecting a continuation. The hourly, on the other hand, was showing me a strong move up by this time. TTM's already up here by now, and I'm seeing a strong move up. I get the retest, get in, hold, wake up at 6 a.m. in the morning to watch what Tesla does pre-market, and then get that rally up to the high and try to get out down here. So that was basically this way. So anybody has any questions, feel free. If not, I think that's that. Okay, I'll look at Mio for a second.
Hold up. Let me go ahead. Don't worry, you can take a look at that. But I wanted to go ahead and add a little bit on that Tesla.
I'll go back to the Tesla chart. I'll look at it after.
No. Don't even worry about it.
You sure?
Okay, you're already here. The same day, that Jay decided to take the swing trade was also when Tesla announced their 5-1 stock split. So he had fundamentals on his side and also price action and probability to help his trade out as well. So those are
I
things you
actually
want to take a look
forgot
at.
about that. That's actually really important. 90% of good swing trades, 90 to 95% either have sector catalysts, the whole sector's running, BA, DAL, UAL, RCL, those run together. Tesla, either there's an individual stock catalyst, there's upcoming earnings, there's market news, there's almost always a catalyst. If not, you really are just anticipating a breakout, which I don't like to do. I like to wait for some type of catalyst on the stock. Thank you for mentioning that.
No problem.
So now let me take a look at Mu. If anybody wants the watch list that I use after this, mine is it's just built up from seeing what other traders swing, what's liquid enough. Let me know and I'll send it to you guys. I don't
Before
want
you
to
get started with MU, I just wanted to clarify. Could everybody put in the chat that if they have understood what Jay has said, and if you guys have any questions, feel free to ask questions, please. The whole point of this is that you understand what we are doing.
So first about me, let me talk about something in general that I've learned. Most stocks, strong stocks, almost every stock on my watch list is a stock that's known well, which means any short move is not going to be as sustainable as a long move. So traders that shorted Beyond when it was going down, it's a different story. This was a few months back. It was a beautiful short because Beyond wasn't a well-known stock. It was a hyped up stock. For example, if you look at, take this one, everyone should have heard about this one. This is what's known as just crazy hyped up. The stock is so hyped up that when you get the short, it's normally a good short position. But when you're talking about a stock like Mu or INTC, I would really short this. This made a nice move continuing downwards, but I would be scared to short this because you don't know. A lot of people, like if you think about it, our parents, the older generation, those people will be looking to buy these stocks. They'll hear Warren Buffett say buy when it's low and buy into these stocks when it's pulling down. That's basically what they'll do. They look for these stocks to pull and they'll buy. They'll just buy either when it's rallying or they'll buy when it's coming down. So they'll be like, oh, this stock crashed. Let's buy it now. It's definitely a good stock. It'll go back up. And that's the bucket that Mu falls into. So I would be careful always shorting that, but from a technical setup, not thinking about the stock in itself. What you see here is you have support here. You have a trend line coming down for 3 days, forming almost a triangular pattern with clear down sentiment. You get a breakout, you get a retest of the trend line, you get continuation down. A good short play on this would be down here. But my problem with this short play again is the fact that this is a well-known stock. So it held the lows, it pushed down a little more into the next day, same pattern. Almost always they'll close and they'll push down if the momentum's in that direction. But if you didn't get out at this low, this wouldn't be a play that I held for a day or two to look for continuation. Because in general, I think Mu is going to go for possibly another leg down if it holds below this 46.5 area. If it holds below, I think it has another leg down to go. But if not, what I would expect is for it to break this and slowly reverse to the upside. The daily short is crazy extended to the downside. And this is relatively extended to the downside. Our next major support on Mu, I think Emiliano talked about this, is I would say down near the 42 area and maybe down here. It's actually at support right now, kind of. So what I'm expecting to see is a bounce off of this. But if it doesn't bounce, I would see a short, but I wouldn't trade this at this point, short or long, because I normally like to take. I'm long bias swinging unless there's a major catalyst. Like if news came out on, let's say Apple saying that the company, I don't know, the company's not producing any more iPhones for the next year because of Corona, then yeah, I'd short that based on a technical set. But unless there's major catalyst to the short side, I don't prefer taking things short in general. So that's my thing on Mu for now. I'll try to start sending more explanation for the swing plays I put instead of just putting them. I think that might help a little more. And whenever we do this next, I'll talk about multi-time frame a lot more, and I'll talk about forgot what was the other thing. There's a few other things that I look for a lot in terms of swinging and market sentiment. I think market sentiment is something that's underrated in terms of understanding if the day is going to be chopped, where you should be getting long. Scalping, it's not as big a deal, but swing trading and day trading, it's a very, very important concept. So I think that's it for me for now.
Okay, perfect. I think that we got a lot of value from Jay today. And again, does anybody have any questions as of right now? Is everybody good? Okay. So I'm gonna go ahead and share my screen here. Oh, and here's the day that, wow, what a nice push down. This is the date that Jay was speaking about. Anyways, you guys, I think that wraps up today. We did go a little bit above an hour, but I think that was well worth it. Any other questions you guys have for us at the very moment? Please let me know in the chat or in the questions chat on Discord. If not, we'll go ahead and wrap this up and wait until next week. Does anyone trade zones? Do we trade stocks? I mean, yes. I mean, we use options with stocks, but supply and demand zones. No problem, Jose. Supply and demand zones, I'm pretty sure that just basically support and resistance. So yeah, I mean, I'm pretty sure that we all do. Every time we trade or scalp a break, I'm pretty sure that that's range trading thought. Range trading though, not too familiar with that term, range trading. Jay, would you like to add into range trading? When is it best to scalp, to day trade, and to swing? So in terms of scalping, I'd say for swing trading, you definitely want to have a catalyst on your side. Having a catalyst when you're swing trading is extremely important because it adds to your probability of the trade going your way. If you decide to take a day trade, it's when a major level in a high time frame is broken. I'd say that that's your best bet. Like for example, that trade that Jay was talking about, you could see that that one, I totally forgot the stock. I had a little bit of a brain, but when you're trying to day trade, you want to see that major level is being broken. So, like for example, here on Tesla, if you wanted to day trade something like this, you could see that this area right here and this area where we consolidated. So we're looking at the 5-minute chart. You could have day traded this on the way down and just had this like 810 area. You could see that this on the long chart, we approached almost as a retracement after a hard push up pre-market and then continuation of the move down after earnings. So if you want to day trade, you want to make sure that a lot of at least some sort of catalyst or major level is being broken. And when you're day trading, you also want to see how the market is reacting. You could actually see with this example, again, the same date on Tesla as Jay was speaking. Market currently is down. This is the same candle. Market is moving downwards, making lower lows. I mean, lower highs at this point, if you're looking at the daily chart, and Tesla's coming down with it. On a side note, Tesla just had earnings. So we did see that a lot of this was a reoccurring pattern where stocks would have earnings and they would push up and they would come down. It would almost be inevitable for every single stock that I saw that they would push up, come down, consolidate a little bit, and then continue its move up or make a even lower move. Are we going to have webinars like this in the future? Yes, we are going to be doing a lot more webinars, especially with Jay, Noah, Umer. Umer is also going to be sharing a lot of his current strategies. He's more of a scalping guy, so he's going to be helping you guys out with that as well. The whole point of this, again, going back to the origins of this chat, is to help traders who are in their current, we're all here to help you guys out, and we've all been to having red days, having massive green days, or just being stuck at a place, like for myself and for others as well. So the whole idea of this Discord is to help you guys out, to help ourselves out, as well as we explain our positions, our losses, and our gains, and just again to help everybody out. So and scalping, always there's a chance. Just avoid Fridays when scalping options. I mean, no, you don't have to avoid Fridays and scalping options. At the end of the day, scalping options on Fridays can be the most profitable depending on how much you're using. But just keeping in mind that if you're going to day trade like Friday expiration options, it's very, very dangerous. You don't want to choose anything too out of the money, and also with scalping, you don't want to choose anything too much out of the money because theta will get you. And if the move is not strong enough and the VIX is going against you, you could definitely see premium decay almost instantly. So those are just things you have to keep in mind. So Mondays are pretty safe. Tuesdays, Wednesdays are pretty safe as well. Starting to get into Thursday and Friday, I'd say the Greeks are a lot more relevant. So just keep your head in the game when you're doing that. And also just emotionally, I know that this is hard for everybody, including myself and everybody. We've all been through, those emotional plays. But emotionally, you do have to keep yourself at bay, as it's one of the most important things you got to do, especially on Thursdays and Fridays when trading options. You can definitely lose a lot of money, and I can tell you from, personal experiences. But anyways, you guys, if anybody doesn't have any more questions, I think we call it a wrap. Again, this webinar will be posted, and I will be giving you guys the link as soon as it's rendered and it's up in the YouTube. So as soon as this is all over, you guys will have access to it unlimited. All right. Jay, Noah, do you guys have anything else to add?
Anything you want us to go over for next time, send it in some group. Just tag us on it so that we know. So ahead of time, for example, if you guys want more level 2 tape clips specifically for things, let me know ahead of time. I can find them. Also for swing trades, if you have any questions about different styles, longer term positions, any of that stuff, feel free to ask. So.
All right, and I think Noah has nothing else to add, so I'll go ahead and end it here, you guys. I hope you guys have a good rest of your weekend and enjoy the rest of your day. Have a good one, you guys. We'll see you guys on Monday, all right? Take care.